You too. What it do? It is your boy Young Soros here back with another video, and in today's video we're gonna be going over the top 4 trades or plays that you can take advantage of going into 2024, 2025, and maybe you can get into during the end of the year. I'm also going to be going over the macroeconomic environment and why it matters, but it doesn't, and why CPI didn't affect anything, and what is going on within the markets. It has been a long time since I uploaded the video, so if you guys enjoy, make sure you drop a like, comment, and subscribe, and share the video, man. Get all the information, get all the knowledge out there. But let's jump right into it. So first off, we're going to be starting with bank stocks. I talked about this in a previous video. If you want to hear more about that, go watch the other videos. But JP Morgan, it is a good stock you want to, take advantage of and look at. And why do I say this? Because it is a bank stock. Oh, hold on. It is a bank stock. And with bank stocks, right, they get a lot of money, from interest and, interest rates, all that other sort of stuff. And if you take a look at this chart, JP Morgan, their all-time high was 172. You're at 148 right now. You're not that far from all-time highs, especially rebounding from these October lows and rebounding from the banking crisis here. Now, what's risky about JP Morgan and the bank stocks in that sector of the market is that if one bank collapses and that contagion continues and spreads into the different stocks, I feel like JP Morgan will be able to hold up and withstand, all these difficulties, because JP, they got a lot of assets. They have so much money. They're buying out banks that have collapsed themselves. There is a lot that JP Morgan can handle, and with the rise of interest rates and the rise of the yields and stuff like that, they are making hand over fist with just interest rates alone. But that does come with risk, obviously, right? So even though they're making a lot with the interest rates and all that other sort of stuff, it will be harder for them to make money with their loans. It'll be harder for them, paying them off, debt, all that sort of stuff. But with their bond investments, their yield investments, now what makes this situation interesting is because they have a lot of bonds they bought in 2020, 2021, where interest rates were 0. So now the interest rates are, 5%. They may make a lot, with just the interest rates themselves, but they're still sitting on a bunch of unrealized losses. So it is interesting to see what can come about with JP Morgan and the bank stocks. It is going to be very interesting to see what can happen next. All right, but bank stocks are really good. They are really key when it comes to when we're going through economic turmoil. It doesn't matter, inflation, recession, depression, it doesn't matter. Banks will always be able to make money on both ends, but it is harder because you would have to have the right conditions, and it is more so that is banks are going to be a play where you're going to thread the needle. It is good to buy banks now, or you can wait. If banks have another collapse, banks might fall another 30-40%. But at the same time, they're a good investment to get your feet wet. They're good. They offer dividends, so keep that in mind. Another one that is going to be very, very, interesting is going to be bonds. Now, you may be looking at this chart, and we've been in a bond bear market for since the start of 21, all the way from over here. We've been in a bond bear market. The bonds have been sold off heavily. It is insane how much value the bonds have lost and what is going on. Right now we're in the midst of one of the worst bear markets for the bonds in history. This is one of the biggest sell-off for the bonds in history, and this is the second second longest sell-off for the bonds in history. And what does this mean? What am I telling you? Well, I could be telling you everybody's shorting the bond. Nobody believes that, the bonds can recover. You got Jerome Powell signaling that there's more rates to come. There's a lot going on in the bonds that is against the bonds' favor. And what I tried to do last year is that I tried to, come off this bottom. I bought a whole bunch of bonds. I bought a bunch of bond options, things like that. I got clapped, obviously, right? But that doesn't mean that the opportunity isn't there. The bonds it is extremely hard to time because they move off of macroeconomic factors as well as things within the economy, like our economy, not just macro, but they also move off of micro news, all that, inflation. It is really hard to time macro events because they're happening on such a bigger scale. There's different parts moving around within the macro that one thing may cause this, but it can cause different things to react. And bonds move for different reasons. The bonds can move. The bonds can move up because people are scared that the economy is collapsing, or they can move up because uh, the Fed isn't signaling no more rate hikes, instead rate cuts, so the bonds will start moving up. So there's a different reasons why people want to buy and sell bonds, which makes it harder to see through all the smoke and mirrors of what is going on within bond land. So it is extremely hard to time this trade and to make money off this trade. But what you can do, and this is what most people do, is put it into the long-term investment. That's why they offer yields. That's why they offer, guaranteed percentage for the bonds. You throw $500,000 in there, 5% return, you're making a pretty penny, So it's all about what you want to do. But you can make a fortune shorting and buying the bonds at the right time. Trading them, speculating with them, or you can be safe and just say the bonds are at a good price, they offer a good yield, I'm gonna hold on to these. There's a lot of volatility within the markets, money markets, all this sort of stuff, so bonds are the only thing that's paying out. So it is interesting to play the bonds at these different levels and all the volatility right now. And we got to bounce off this 85 right here like I predicted. I predicted once 95 breaks are going all the way to 85, and I predicted that. Now the question becomes, do we go even lower? Does the Fed signal more rate hikes, or is something finna break? Is something going to break really, really soon? And if something breaks really, really soon, that could lead into the Fed signaling no more rate hikes, or they might even cut if things get really, really bad. And once they cut, the bonds will start, rolling again. And I personally believe that the bonds are telling a story far ahead of the stock market. The stock market is just extremely irrational, volatile right now, but we've been selling off since 2021. So the bonds are ahead of us in terms of what is going on. They've been in a bear market longer than we have. I still believe we're in a bear market. It's just 7 stocks holding up the entire stock market. We're not going to get into that because that is a topic for another day. But I want you guys to understand is that the bonds, like I said in a previous video, go check that one out. The bonds are a window into the future. So right now you see all this downwards pressure, and if you take a look at the stock market, relative to the bonds, yes, you've had downward pressure, but you also had a recovery. Bonds just came down, traded sideways, came back down. So what is this telling us? If we're gonna follow either the bonds are right or the stock market is right, something has to catch up to something eventually. The bonds and the stocks, they usually move in tandem. So either the bond market is right or the stock market is right. And who do you think is going to be right, the stock market or the bond market? I personally believe the stock market is going to be wrong, just because it is more irrational than the bond market. The bond market, there is so much money on the line for the bond market. It is insane, and there's so much money not only on the line, but it also moves because of macroeconomic factors and all this other stuff. The stock market is just a bunch of different companies. They just move around a lot, and they are affected to macro and things like that. But depending on how to go about it and what's going on, they could easily just ignore macroeconomic data, macro factors. They can ignore CPI, all of that. They can ignore everything. We've seen it happen time and time again. But they can't ignore this forever. So the bonds are signaling to us that, hey, there is a day of reckoning coming for the stock market world. And right now, the stock market is sitting in this channel currently where the bonds were. They're sitting in this channel, and once the bonds make their next move, the stock market is going to make their next leg lower, or they may be sitting in this first channel. I don't know, but as of right now, the bonds are leading the stock market. There is going to be a huge stock market crash in the next year or two, depending on how things play out. But with that being said, you want to go bonds within this volatility, within all this sort of stuff, right? Now, the next trade I have for you guys, it is going to be the Japanese yen. Now, you may be saying to yourself, okay, why the Japanese yen, right? Take a look at this chart. It is following a similar path the same way the bonds have been. The Japanese yen has been following a similar path the same way the bonds have been. Now, you want to go out and do your research on what's going on in Japan and all that sort of stuff, because that can affect the way things are moving. But this is a pretty similar, look as to the bonds and all that sort of stuff. You want to know why? Because Japan, this may sound hard to believe, guys, but Japan owns a lot of U.S. bonds. Once they start selling their U.S. bonds because they're afraid of what's going on in our economy and all that sort of stuff, that causes this to drop, yields to rise, and then, in return, that causes their currency to get weaker and weaker. And what's interesting about this is that you have to be on the lookout. Japan's currency, this is usually a safe haven, right? This is usually a safe haven for people to throw their money in during times of economic turmoil. Well, we've been selling off for about as long as the bonds have been selling off. And each time the bonds has gotten a little bounce, the yen, they get their little bounce too. It may be more aggressive right now, but as you can see, the bonds new low hasn't hit a new low yet. So they are really similar in terms of what is going on. And if Japan keeps up their policy of rate control and what they got going on over there, they want inflation. So if they continue to have inflation, their currency is going to get stronger and stronger and stronger. Now, with that being said, right, this is a perfect opportunity to get in. They have been getting sold off for the longest time possible, and even if we expand it out, this is the lowest it's been ever. So this is a perfect opportunity to get in. This is a perfect moment. You want to play this right, because when the recession happens and you have a move like you did in 2020, 2021, it is going to be a wild ride, all right? This is a good place to park your money during economic turmoil, like I said. And if Japan, once they start getting their situation under control with, dealing with deflation and changing from deflation to inflation, that is where you're going to start seeing the most opportunities and most bang for your buck. But it all depends on, like I said, what is going on with Japan, because they are one of the biggest bond holders in the world. So they start selling off bonds even more, yields are going to continue to rise, further prolonging this bear market in the bonds that we are in currently. Now, that is it for the trades that I have and recommend to you guys going from 2024 to 2025. These are plays that I've been looking at, I've been researching, that can, these are the plays where you look at Michael Burry, Warren Buffett, these are the plays, these are the trades that made these guys. If you want to, this is what I'm chasing right now, right? I am waiting for that perfect moment where I can say, all right, this is my Michael Burry moment. These are the plays that I'm looking at: the bonds, the yen, and outlier is banks, right? And I have a couple other plays. I don't want to give those out just yet. I may not want to give those out at all because, like I said, I don't want those trades to become crowded, all that sort of stuff. It may not work. And, it's a little bit on the riskier side. I do have a couple of experimental trades going on, but these are just the basic three that, if you're smart with it, if you can time it, you will change your life. And if you want to make this, make a legacy out of this, then these are the things that you could be looking for. And if you can predict this, if you can spot this, time it, you can easily change your life and be recognized for all the work you put in, the research, all that, right? So, with that being said, I hope you guys enjoyed that little section of just me talking about all that's going on. Now, let's get into the plays that I made this week. As you can see, I'm down a pretty penny, $420. That's not including the TLTs, the bond plays. I lost a lot in the bond plays. I'm down on the Morgan Stanleys as we speak right now. They got earnings coming up soon, so I'm hoping that they blow earnings out of the water, and then we'll go from there. I also cut out a good majority of my macroeconomic plays. I cut out a good majority of my macroeconomic plays because they conflict with the market, right? Before, the market wasn't really reacting to the macroeconomic factors that's going on, but now they are, right? So this has kind of changed my mindset in my really where we go from here. I still think the market could experience an end of the year rally, right? But now it's getting complicated because you have the war that's going on in Israel, and now you have bond yields moving higher. You have the dollar moving higher. I cut out the dollar trade, by the way, too, because I'm gonna get into a separate video, because that is a video on its own. But just know I cut out the dollar trade. I wasn't feeling it anymore. Even though the dollar is rocketing back up, the dollar is really tricky to play now. Not only that, but the options chain is bogus. There's a lot going on within that, but dollar is extremely strong and is being held down by the different currencies of the world, right? So there is a lot that's going on with the dollar right now, and I just said, even though the dollar is going to move up, it's going to go higher. I don't want to play that, and it also conflicts with the stock market, because dollar moves higher, market moves lower, and then that conflicts with the plays, right? I want all my plays to be relatively aligned. There's some that aren't going to be aligned that we're going to talk about here, but for the most part, these are, I want them to be relatively aligned, right? I don't want to go against the market and then be, against the macroeconomic factors that are driving the market lower, and vice versa. So let's get into it. Starting with, I bought some Apple puts yesterday. I bought the 170s for about $2, made $16 profit off of that. Not too shabby. I bought these for November. I feel like Apple, they had this nice little run up to 180. They're going to come out to 170. Will it be shorter or longer? I don't know. It all depends on how bad is Apple going to sell off. They got a humongous, lift for a couple days, and, back to reality I go. So I'm going to short at the very top. This could go against me, as I did say that the market is going to rally. I still believe that, but now this is where the market isn't always guaranteed, right? The stock market rally could still happen end of the year, but now we got to get through war with Israel. Now we got to get through macroeconomic factors, and the market is reacting to them. You understand what I'm saying? So, with that being said, bought the Apples for 170. I also, flipped a couple of the NASDAQ puts. I was day trading the NASDAQs for a little bit. Made $400 off the NASDAQs in total, but I bought these 362s for about, a dollar 70, and up on these about 20 bucks. Not too shabby. I only bought one because again, I'm day trading these. I'm flipping out of these, so I don't want to put too much into it and then get burnt. Next, we have the Mastercards. Obviously, I'm down on those. They have earnings coming up, so we'll see once earnings gets here. The targets, I'm actually up on the targets, and I'm glad I picked these because if we take a look at target, the chart right now, the target chart is looking real intriguing. It is looking really, really intriguing, as you can see if we zoom out here. Yeah, right. So you had this huge spike right here, and I decided, okay, we're gonna get in right here. You know, they've been getting sold off, you know, pretty bad. They've been getting sold off pretty bad, as you can see, and then it just gets even worse as we get into the next quarter, getting sold off, and then now we're bouncing off the lows. You broke this, right? So I got in around 109, 110. It's working out currently right now, and if we can keep going, and then with earnings season coming up, if earnings do well, then Target has a lot of room to run, especially since it is a staple. You know, it is a staple and a discretionary. It can be considered both. But anyways, Target's going to run up with the stock market if we decide to have a rally. If we don't have a rally, again, it has been getting sold down and beat up so much that, you know, it is going to have a dead cat bounce at the very least, and that can potentially cause a short squeeze, all that sort of stuff. So I am in that as well. The forwards, I'm down on the forward. Forward has not moved much. It's actually been going down recently. Again, I am still holding those, but I got time on those as well. I got time on the targets, so I'm going to continue to hold the forwards, and we'll see where we go from there. Again, I'm going to make more trades in the future, but you know, we're taking it one day at a time. This isn't the time to make any irrational decisions, right? And it's better to not over trade than to under trade. So you know, it's better to just stick with it and to be patient rather than just make a bunch of trades at once. You see what I'm saying? And again, right? It's all about timing. So with that being said, I hope you guys enjoyed this video. It has been your boy Young Sora.